Thanks, darling, and a very warm welcome to you wherever you are in the world. Hopefully you can hear me okay, and if I do drop out, then I'm sure Anna will tell me. Just move the chat box out of the way. There's quite a lot going on. I've got three platforms up and running as usual. I've got NinjaTrader here. I've got TradeStation down at the bottom here. I'll pull that up in a minute. And over on the right-hand screen, I've got TradingView. I just wanted to start with cable because the 10-minute chart is really it's a microcosm of the whole business of what goes on in terms of this sort of period of price action, but it's also a great example of opportunities to get in and the reversals and how that's all reflected in terms of the VPA methodology. The nice thing with Ninja, of course, is it does print in your local time. So this is coming up to the European Open at 7 o'clock. So what do we get at 7 o'clock? We get a nice volatility candle. What do we expect? We either expect a reversal or we expect congestion. In this case, we got a reversal. And it's just a classical trap move. You see them all the time, particularly at the London at crossovers, European crossover, London crossover into US session, London fix. You get them everywhere. You'll get them at 10 o'clock UK time in the evening when you get the rollover. They happen everywhere, and they happen obviously with news releases as well. So it's a nice start to the day. We get a nice trap move. We expect it, and on we go. We come into London. What happens at London? We get a huge surge in volume, which is what we expect to see. We start to see some heavy selling under this candle. We're down at the volume point of control, so we have to wait for it to break away. It comes back, it retests all the time. We've got indecision, we've got a retest here. Then we start to drop away. The volume's increasing, more indecision on that particular candle. These are the candles you're always looking for in a price waterfall. They are absolutely key. They don't always appear in isolation as they did in this case. An effort to rally falls away, closes to the downside. Doesn't have to close negative, can close positive. And in addition to that, you may often see this precursor of it, maybe you get a little rally, and then you get one of these. But if you get one with solid volume, which you've got here, then it's clearly a signal that the market is not responsive to buying, and that's what it's about. The market makers, they're trying to push it up. The market is not responsive. They're selling into weakness, and down it comes again. And it's all on good volume as well. You get the next candle, nice widespread down candle. What you're expecting at this point when it drops away is to move through this region pretty rapidly because this is a relatively low volume area. And volume works in exactly the same way as these price levels do. These are price-based resistance, price-based support at that point that was broken through. Another level below here. So we had two little clusters here. In isolation, quite strong, but when you put them together, that is a strong platform. So when this is bouncing along through here, it's a strong platform, strong platform, strong platform. It then becomes strong resistance at this point where you've got the two of them pretty much acting as a cluster. So you've got some protection there. And the other beauty of trading this, which is obviously a breakaway trade from the volume point of control, which is the yellow line here, is that it gives you very clear levels as to where to put your stop losses. Now, you can go right up to this level if that fulfills your money management rules. But even if you go in at this level, any recovery back through here, back to the VPOC and back through this one here as well, there's four reasons there, four pretty strong reasons to give you some decent protection in the case of a pullback. So again, it's just a facet of trading. It doesn't suit everyone because to trade these sorts of breakouts, you have to be patient, you have to wait, you're looking for congestion, whereas most traders don't look for congestion. You are looking for congestion and you're just prepared to be patient and wait for the breakaway when it comes. So through this low volume area here, very little in the way of support provided there. So you expect the price to go through rapidly, and it does on decent volume. We have another one here, and then we get down to this group at the bottom here, which is interesting because you start to see some buying coming in. You see it here on the first hammer. Then you've got a 2-bar reversal, and this is exactly the same. It's almost identical to this candle where you've got a red body and you've got a deep wick. So if you overlay this candle on here, you are basically looking at exactly the same thing as here. It just happens to be a 2-bar reversal. And that is why when you read the candlestick books and all the rest of it, you know, bullish engulfing and bearish engulfing candles are important, not for that particular reason, but for the fact that they, when you overlay one on the other, they are either a hammer or a shooting star candle. That's why they are so significant and so important in the whole sort of candlestick analysis methodology. So you've basically got 3 hammers here spread over, what time frame? We're on the 10-minute here. So basically 10-minute, this will be on a 20-minute chart. This is on a 10-minute. So we are expecting buying. We've got good volume under here. We've got very good buying signals. And what do we expect to see? Which is basically what happens. The reversal, we go back up again. Again, we're moving through this low volume region. So, you know, you don't expect this candle to really struggle, and it's not going to need so much volume to actually drive through there. So that's no great surprise. We're expecting it from here. We're looking for reversal. And of course, you would have this alongside the CSI, maybe at that point. I don't know. I wasn't looking at the CSIs at that particular time. But almost certainly, you know, on a 1-2 minute time frame, 3-minute time frame, maybe they would be, those 2 currencies would have been in oversold and overbought territory, and you as a scalping trader might be looking at that as a reversal opportunity, certainly backed up by what you're seeing on the chart here. We then get the little rally higher. The volume's fine. It's pretty much the same. But what's interesting is obviously when you look at it and you see the volume associated with this candle. Okay, if we say, well, that's our benchmark, is that reasonable? It's a widespread up candle on this level of volume. And then we get to this one up here, which is only 2 candles later, and you've got almost exactly the same amount of volume, but you've got maybe less than a half of the price action, maybe even a third of the price action which has occurred. So again, what does that tell you? It tells you that this is struggling. The recovery is running into difficulty. It's running into several areas of difficulty. It's got all this price-based stuff above here. It's got the volume point of control. You've also got a great wedge of volume here as well. But it tells you that simply based on the spread of the candle, that if this is true, this could be false, of course. You could say, well, actually, you know, this was a fake move. This should have required much more volume to do that amount of price action, which certainly could be the case. But when you look at it, you think this is weakness coming in. This is not strong. This is the analogy I always use, which you've heard many times before, I'm sure, is you're driving a car up an icy mountainside, and as the steepness increases, you apply more and more pressure to the accelerator or the gas, and ultimately you arrive at a point where you're not moving forward, you're just applying increased pressure and the wheels start to spin, so your forward momentum comes to a standstill. And it's pretty much the same here. You're basically forcing more effort into a rally, and it's just not receptive. In other words, it's being knocked back by selling all the time. We then get to the next candle, and that, of course, hits the volume point of control bang on. It goes up into that level. It's not going to get through there too easily. Decent volume under there. We get another effort to rally here under, you know, good volume here. And again, this is very similar to this candle over here. Effort to rally falls away. And as I said, the body of the candle is not so significant. It needs to be relatively small. Perhaps this is a little bit too wide, but it needs to be relatively small. Certainly, if it was an up candle, you'd want it, you know, maybe down here somewhere for more comfort and a deeper wick to the upper body. But the principle is very much the same. The market's tried to rally. It's been knocked back by selling. You know, it's weak. In addition to that, you've got all this stuff overhead, and so on we go down again. And now we've got another one coming in here. We had, in fact, almost identical pattern to here, where you had, you know, a sort of indecision candle, weak but indecisive, and then you followed it up with this one, which is this one on good volume. Now we'll see what the next one does as we move down to back down to the bottom here. It's a classical little piece of price action. Now, the other thing that this also raises, and the other reason I wanted to highlight it particularly, is this: that if you're looking at opportunities for trading, you have to put it in the context of the chart. And if you were looking at this for a scalping opportunity, because that's essentially what it is, let's just move the chat box out of the way. I mean, we're going from, let's say, 45 up to 65. So we're talking about 20 pips in here, roughly. as a scalping opportunity, you're not going to get right out in at the bottom and you're not going to get right out at the top. So let's call it a scalping opportunity of, let's say, 10 pips. The question you've got to ask yourself is, once I get into this trade, have I got enough clear water to this trade before I think we're going to run into difficulty? And it's very obvious looking at it that almost certainly you are going to run into difficulties once you get through this region and up to this level, because there's too much there that is going to cause the price action to pause. At the very least, this might have come up here if it hadn't triggered this particular candle. Had we got up to this level, fine, okay, we get here. What do we expect when we get to this point? We expect congestion. It's inevitable because you're back at the volume point of control. We're only looking at one chart here. You'd be looking at multiple timeframes, of course you would. But inevitably, that is the consequence of arriving at that particular piece of price action on the chart. You've got all this price resistance overhead as well. You've got to break through here. You've got to hit the VPOT. You've got to get out the other side and all the rest of it. So the question you have to ask yourself is, whenever you look at a chart, whatever your time frame, whether you're an out-and-out scalper, whether you're a longer-term swing, trend trader, revert, whatever it is, you have to look at the chart in the context of what is the likelihood that this position that I'm about to consider in the market can deliver. Am I comfortable with what it's going to deliver? If you're comfortable with it delivering a handful of pips up here, 5, 6, 7, 8, 10 pips, whatever, that's absolutely fine. If you're trading a euro dollar, perfectly fine. If you're trading a pound yen, not fine, because you are trading with too much baggage in terms of spread. So it just won't work. It's as simple as that. So whenever you're looking at opportunities, you have to frame it in the context of the chart and what it will deliver. It's not about risk and reward. Risk and reward is a load of hogwash. You have to look at it in the context of the chart and assess it on that basis. It's as simple as that. But I just wanted to go through that particular example because it's just a classic little example of lots of different aspects, not only of VPA, but also of trading per se. And as I say, that is purely based on the context of one time frame. This was the 5-minute equivalent. Similar sort of analysis that you would look at from a price-based resistance perspective. You've got a lot of levels here. You've got a cluster of 2 here. That's an extremely strong level. You've got another one above it, which is strong too. This is on the accumulation distribution indicator, which presents these levels automatically for you. I haven't put these on. These are automatically calculated based on the number of times a level has been tested. So you get this wonderful visual picture instantly. You know, this level up here is not strong because it's only been tested a couple of times. You might not be able to see the numbers down here, but there's 6s and 5s in here and 4s. This is 1, this is 2. So you get this visual picture, all time frames of these particular levels from a price-based perspective as to how they are likely to hinder progress or support progress of the price action. Now we've come back down onto the volume point of control. What are we expecting? Exactly what we're seeing, which is congestion at that point. That's on Ninja. Let's just pull up the, let me just pull up TradeStation. This is on TradeStation. This is the futures I've moved to now. So I'm on currency futures here on TradeStation Global. Now this is being driven by the interactive brokers feed. I've got the interactive brokers feed linked directly. So that is providing the data feed for this particular application. If you have an IB account, it's a terrific way to blend the two together. It's called TradeStation Global. It runs on 9.5. It means you can trade straight off the screen through interactive brokers. It's all seamless. It's just a wonderful way to do it. It's just straightforward, and obviously you've got the real strength of TradeStation. This is Radar Screen, which is a fantastic application, immensely powerful. I've got it set up here on the currency futures. I've got the 6A, which is the Aussie dollar. I've got the 6B, which is the pound dollar. I've got 6C, which is CAD dollar, not dollar CAD, because everything in futures is inverse. I've got the 6E euro dollar, 6N New Zealand dollar down here. And I've got the Aussie dollar up here, which I've been following all morning. Just pop that out. Really nice steady trade on that. The trend monitor here is nice red throughout, punctuated with little rallies. But essentially the beauty of this is, let me just drop that back out of the way. The beauty of having a radar screen down here is many. First of all, just a quick glance at that. There's a lot of red around, and that tells me obviously it's dollar buying. So pretty much the majors, not entirely, and obviously it varies, but this is on 1 through 15 minutes. So we're on the faster time frames here. So there's lots of dollar buying at the moment. You can see it over here. This is the CSI on 5 on TradeStation. This is what we're seeing, dollar buying, and that is reflecting the fact that a lot of these cells here are red. And the reason they're red is because I've got the trend monitor here, which is over here on the chart. I've got the trends indicator, which are these, the trend dots, which are on here. And then in addition to that, I've also got the volatility indicator, just to give me a heads up on when we saw the last volatility trigger for that particular currency pair. You can see here on the 6A, we had a bar 8 bars ago on the 3 minute. I've just flicked that over onto the 3 minute. Just pop it up full size. There we are. There it is. Ton of volume coming in. Big volatility trigger. What are we expecting? One of two things, either congestion or a reversal. We're getting congestion. It's just a terrific way to see all this stuff very, very quickly. And also to give you a heads up to opportunities. Now you can see up and down the other charts, there's not that many volatility triggers at the moment. Most recent one here on 1 minute on New Zealand dollar. And we have one over here on cable 4 bars ago on the 1 minute time frame. It's just a terrific, I can't stress it too strongly. It just gives you that terrific visual of all the time frames that you want. You can set these up in any which way you like. I've just happened to have these arrays, but you can have any arrays you like. Link it through to the chart. I've got it symbol linked here, and I've got it interval linked as well. So whenever you click on these cells down here, you can automatically scroll through and it'll appear over here. So you can go through these real quick to pick up the opportunities. Looks like now we've got another volatility trigger coming in on, this is on CAD dollar. There we go. So you just pick it up straight away, straight onto the chart. There it is. There's the volatility trigger. We're at the volume point of control in this particular time frame. Been down, and now we're starting to see a little bit of a rally down here, a little bit of a transition in terms of trend monitor there. It's very, very quick to do. It's just a fantastic platform. I've also got the NQ over on this chart, over on the right-hand side. Similar sort of arrangement here. I mean, the NQ, if you follow the indices, as Anna said, there's been a lot of divergence over the last month, and certainly over the last sort of 12 months to 18 months. The concept of the three sisters moving en masse together, forwards and backwards, advancing and declining, has really changed dramatically. And what we see consistently and often is the NQ advancing and the other two, the YM and the ES, reversing. So you see selling on two indices and strong buying on another. So the NQ has been leading the pack pretty much. And in addition to that, you also see days where the NQ is down and the other two are up. So the concept of, there are a lot of relationships, these relationships that we talk about in the program, the intermarket relationships, the cross-market relationships, they do break down from time to time. They are not cast in stone, and they do change, and they change for lots of different reasons, but they do come back, they do re-engage, but from time to time they break down. I'm not saying this is a breakdown, I'm just saying it's just something you have to be aware of. You can't rely on the fact that if the NQ is up, then automatically assume that everything else is up. And indeed, in some ways, we're seeing that right now, because with the NQ rising, you would automatically expect to see yen selling, weakness there. You see, Aussie buying, the usual sorts of relationships, and you're not seeing that at the moment. So there is quite a bit of breakdown in that sort of sentiment relationship. I've got exactly this, well, I've got a similar sort of setup here in terms of I've got the radar screen. This is the NQ contract running on 1 minute right the way through to the weekly. The trend monitor here, you can see how blue it is. This is on 1 minute, but essentially it's blue right the way through across the faster time frames. A little bit of divergence here back into a slowdown on the 5 and 10, but out the 15, 20, 30, it's still pretty bullish, that particular contract. Got the VPOC running here as well, moving up into a low volume region on the VPOC here. decent volume here. The volume fell away on the last candle there, a little bit of a wick to the upper body, so a little bit of weakness coming in here, and we're also getting up to the top of the chart there, so you'd have to flick over onto another time frame. Bear in mind this is 1 minute. Got the trend dots here. Remember, the trend dots work very close to the price action. The way to view the trend dots is to view them both in context of where they are on the candle itself, and obviously in terms of color, because when the market is bullish, these trend dots will be below, they will be blue. Then you move into congestion, they start to move into the body of the candle. If the bullish sentiment continues, then they come to the underside again. If you get some bearish sentiment, they'll move to the top. In that occasion, we moved on again, up onto the top, came out, onto the top side, changed color. Then we had the reversal coming in. Now we're back to the underside again, and on up we go. But what you notice about the trend monitor is down here, there is absolutely no change in color when we move into these minor pause points here. So where you get the trend dot changing color, you don't see anything on the trend monitor, and that is what you expect to see. And that is why we always urge all our customers to use the trend monitor and the trend dots in combination, because one works very close to the price action and the other one is stepped back from the price action. The trend monitor takes a much more considered view of changes in trend. It doesn't change frequently. It will only change when it thinks it sees a significant change, and at that point it will move into one of these color transitional changes to a darker blue, a darker red, and out the other side into bright red if it is a full-blown conversion into from one change to the other, from bearish to bullish or bullish to bearish. I've got the time and sales running down here. This is coming as a straight feed off the IB feed. So you can actually see these are real orders. These are not, this is not an order ladder. So these are not spoofed. They're not pending. These are actual executed orders on Globex right now. You can see the numbers going through here. I'm not interested in the 1s and 2s. I'm not interested in the 5s and 10s. I'm looking for 20, 30, 40, 50, 100, that sort of block size going through, which I will then equate to what happens to the price action. I'll also look at where that volume comes in. Is it coming, at the bid, above the ask, below, wherever it is, because that's significant, because it gives you information about the likely reaction of the market, and you then watch for the reaction of the market, how it relates to the time and sales window, and the response to that particular block going through. I'm not going to dwell on it now, but it's just another level of trading, if you will. But as I say, with interactive, you get it. There's a 25 gone through below the bid. Some slightly bigger numbers coming through, 16. I'm really looking for anything much bigger than that, and certainly up into triple figures when the market gets underway. And they all go through at 0s and 5s. That's on Globex, by the way. And just to change tack for a moment, anyone who tells you that you can't trade Globex, you've got to wait for the cash markets to open, I'm sorry, again, it's another statement of hogwash as far as I'm concerned. I do have fairly strong opinions about all this stuff, as you can probably tell. I have strong opinions. Well, not always. Yep. I want to drop over onto TradingView next and talk Bitcoin for a bit. Where will you find all the bits and pieces? You'll find them here this is where you'll find all the indicators at quantumtrading.com. We have all the platforms, MT45, NinjaTrader 7.8, TradingView, which I've just been through with you, and also TradeStation has now been launched. We've got two versions of that. That's the TradeStation 9.5 with interactive brokers as the live feed, and TradeStation 10, which is TradeStation Securities, and they, of course, incorporate the awesome power of radar screen, which is wonderful. And remember, when you invest with us, there's several things to remember. First of all, you can move your indicators from platform to platform. So if you start with one platform, you perhaps want to move to another platform, that's perfectly fine. We don't charge you for that. We just transfer your indicators across. We have a lot of customers who start perhaps with MT4 or TradingView, then they want to move to TradeStation or NinjaTrader. Perfectly fine, we do that for you, absolutely no charge at all. And finally, if you do, whether you buy one indicator or several, if you upgrade to another package, for example, we will always give you a credit for those indicators. So you never lose out, you never lose your initial investment. We always protect you in that respect. So you'll always receive a full credit. And finally, of course, if you invest in the full package, even more so with TradeStation at the moment, because it's currently at $677, I think, off the top of my head. But once those other indicators are developed for the platform, then we will be increasing the price, which will align with the MT45 platform. So it's a great time to invest with TradingView because, as I say, you'll get all those indicators free of charge. You won't be paying for them. So it's not a bad time to invest in that package. But all the other packages, if you invest with a full package, we also give you all future indicators we develop free of charge. It's just our way of saying thank you. Finally, just to give you a heads up on the education program, I've just touched on one or two aspects of it. Obviously, within the program here, it's called the Complete Forex Trading Program because that's exactly what it is. To say it's comprehensive is a disservice. It is everything you need to know. You have all the modules which cover the psychology, the fundamental analysis, relational analysis, so you'll understand how markets relate to one another in terms of risk, in terms of relationships to bonds, bond yields, how commodities fit into that structure, and of course the actual relationships within markets, you know, how currency pairs relate within the markets themselves. You've got a deep dive into technical analysis, of course, that is VPA. It's all the Wyckoffean principles, it's Wyckoff's three laws. And in addition to that, it's how to apply VPA, not just to straightforward analysis, but we teach you how to understand when a trend is coming to a pause point and to identify whether it's actually a reversal in trend, in other words, from primary to primary, or is it simply a pullback? And if there's one thing that you would learn, it is simply that, because that will stop you getting out of trades too early. It's as simple as that. The mechanics of trading, and then there's something like 200 to 300 hours of video, VPA chart examples, how to use the indicators, pulling it all together, topic webinars with Anna and myself, a huge webinar library, and a resources section as well. And of course, all of that is backed up now. We've added the QTE funded Forex program. And the reason we've done it is very simple, because we wanted to give you, our students, and this is only available to students on the program. I'm sorry, it's not available to anyone else. If you're a student on the program, you have the option to join. It's there to give you the opportunity to leverage your knowledge. And it's very simple in the way it works. It's a no risk deal as far as you're concerned, because you are trading our money. It's as simple as that. We give you the opportunity to start with an evaluation account at $5,000, $10,000, or $15,000. Once you've achieved a very achievable target at that level, you've proved to yourself that you have the consistency to trade, you've proved to us you have the consistency to trade, we then multiply it by 4. So if you start with a $15,000 account, we push you up to 60,000, and thereafter we double it. So you go from 60 to 120 to 240, and in pretty much no time at all, you would be up trading $1 and $2 million accounts. It is simple as that. There is no risk to you. There's a one-off fee to pay. That's it. That's your only expense of getting into that particular program, but it's entirely optional. What we've now bolted together, we feel it gives the complete package, if you like, of giving you the opportunity as a student to benefit from your knowledge and prove to yourself that you can trade a large money account at no risk. So that's it. Hope you've enjoyed this particular video. Lots more to come as always. Thanks for watching. See you again soon, and bye for now. Where will you find all the bits and pieces? You'll find them here this is where you'll find all the indicators at quantumtrading.com. We have all the platforms, MT45, NinjaTrader 7.8, TradingView, which I've just been through with you, and also TradeStation has now been launched. We've got 2 versions of that. That's the TradeStation 9.5 with interactive brokers as the live feed, and TradeStation 10, which is TradeStation Securities, and they of course incorporate the awesome power of radar screen, which is wonderful. And remember, when you invest with us, there's several things to remember. First of all, you can move your indicators from platform to platform. So if you start with one platform, you perhaps want to move to another platform, that's perfectly fine. We don't charge you for that. We just transfer your indicators across. We have a lot of customers who start perhaps with MT4 or TradingView, then they want to move to TradeStation or NinjaTrader. Perfectly fine, we do that for you, absolutely no charge at all. And finally, if you do, whether you buy one indicator or several, If you upgrade to another package, for example, we will always give you a credit for those indicators. So you never lose out, you never lose your initial investment. We always protect you in that respect. So you'll always receive a full credit. And finally, of course, if you invest in the full package, even more so with TradeStation at the moment, because it's currently at $677, I think, off the top of my head. But once those other indicators are developed for the platform, then we will be increasing the price, which will align with the MT45 platform. So it's a great time to invest with TradingView because, as I say, you'll get all those indicators free of charge. You won't be paying for them. So it's not a bad time to invest in that package. But all the other packages, if you invest with a full package, we also give you all future indicators we develop free of charge. It's just our way of saying thank you. Finally, just to give you a heads up on the education program, I've just touched on one or two aspects of it. Obviously, within the program here, it's called the Complete Forex Trading Program because that's exactly what it is. To say it's comprehensive is a disservice. It is everything you need to know. You have all the modules which cover the psychology, the fundamental analysis, relational analysis, so you'll understand how markets relate to one another in terms of risk, in terms of relationships to bonds, bond yields, how commodities fit into that structure, and of course the actual relationships within markets, you know, how currency pairs relate within the markets themselves. You've got a deep dive into technical analysis, of course, that is VPA. It's all the Wyckoffean principles, it's Wyckoff's three laws. And in addition to that, it's how to apply VPA, not just to straightforward analysis, but we teach you how to understand when a trend is coming to a pause point and to identify whether it's actually a reversal in trend, in other words, from primary to primary, or is it simply a pullback? And if there's one thing that you would learn, it is simply that, because that will stop you getting out of trades too early. It's as simple as that. The mechanics of trading, and then there's something like 200 to 300 hours of video, VPA chart examples, how to use the indicators, pulling it all together, topic webinars with Anna and myself, a huge webinar library, and a resources section as well. And of course, all of that is backed up now. We've added the QTE funded Forex program. And the reason we've done it is very simple, because we wanted to give you, our students, and this is only available to students on the program. I'm sorry, it's not available to anyone else. If you're a student on the program, you have the option to join. It's there to give you the opportunity to leverage your knowledge. And it's very simple in the way it works. It's a no risk deal as far as you're concerned, because you are trading our money. It's as simple as that. We give you the opportunity to start with an evaluation account at $5,000, $10,000, or $15,000. Once you've achieved a very achievable target at that level, you've proved to yourself that you have the consistency to trade, you've proved to us you have the consistency to trade, we then multiply it by 4. So if you start with a $15,000 account, we push you up to 60,000, and thereafter we double it. So you go from 60 to 120 to 240, and in pretty much no time at all, you would be up trading $1 and $2 million accounts. It is simple as that. There is no risk to you. There's a one-off fee to pay. That's it. That's your only expense of getting into that particular program, but it's entirely optional. What we've now bolted together, we feel it gives the complete package, if you like, of giving you the opportunity as a student to benefit from your knowledge and prove to yourself that you can trade a large money account at no risk. So that's it. Hope you've enjoyed this particular video. Lots more to come as always. Thanks for watching. See you again soon, and bye for now.